of Orchard, of Orchard.
My name's Ravi Thakur. I'm the CEO of Orchard Funding Group plc. Just to give you a bit of background about me, I'm a lawyer. I studied law at Oxford. After that, I went to a firm called Clifford Chance, which I think now is the largest law firm in the world, where I qualified as a solicitor. And my speciality was banking law and finance company law and deals around finance companies raising money and lending money. From law, I went into investment banking. And as an investment banker, my role was buying, selling and growing finance companies. So from the very beginning of my professional career, I was involved in finance businesses. In 2002, I decided that I'd like to set up my own finance company, and that's where Orchard Funding Group plc started. In 20 years, we've focused on three core markets. Our principal market is the insurance premium finance market. And just to explain that a little, when you or I buy our insurance policy or insurance for our car, it may cost £1,000. What we help people do is spread the cost of that policy over a period of 12 months. So we've always regarded ourselves as providing an essential finance for an essential service. We're helping people to spread the cost of something that they have to pay for. And insurance is probably the best example of a product that all of us have to pay for on an annual basis. Our other markets, our secondary markets, the first one of those is related to professional fees. So we help clients of accountants, again, spread their fees over a period of 12 months. So again, avoiding the need to pay for a lump sum fee payment, we enable the consumer or the business to spread those payments over a longer and more convenient period of time. We have also lending in the site fee market, which you may or may not be familiar with, but it's focused around static caravan owners wanting to spread the cost of their site fees, which can amount to a few £1,000s every year, to spread those fees over a 12-month period. The other sectors where we have expertise and lending relate to golf fees, which again, we enable customers, usually consumers, to spread the cost of those golf fees over a 12-month period. And also, we have recently launched a school fee product, which helps parents spread the cost of their fees. Their annual fees can be many thousands of pounds, as I'm sure a lot of you know, and we help the parents spread those fees over a 12-month period. So we've got a 20-year track record of lending, and in that period we have lent very safely and very prudently many hundreds of millions of pounds to consumers, to businesses who want to spread the cost of an essential payment or something that they need to pay. So we believe that we've offered a good service to all of those borrowers over a long track record. We, in that time, have experienced minimal losses because people generally need to pay for these services that they are being funded, and therefore there is a very high propensity for the consumer or the business to pay for the service. And therefore, during the global financial crisis, we still managed to do all of the lending that we'd done pre-global financial crisis, and we still managed to provide a service, a funding facility to the thousands of consumers and businesses that needed our type of funding. In terms of our current customers, we are currently lending to over 40,000 individuals and businesses who all rely on our service to provide the facility for them to be able to spread the cost of their insurance or their accountancy fees or their school fees. So we are enabling 40,000 businesses and consumers to pay for what we believe are essential services. In terms of our current partners, our 40,000 customers usually do their business through insurance brokers. So we have contractual relationships with over 100 insurance brokers whose customers we look after. We have contractual relationships with over 400 accountancy firms, again, whose customers we provide finance to. In terms of static caravan market, we launched into that market last year, and we already have contractual relationships with over 10 very large park operators, including some of the largest park operators in the UK that you'll see quite regularly advertising on the television. So, in terms of the risk in our lending, as I say, we've been lending for over 20 years. We believe our lending is very low risk because we are funding something which is essential to the person taking the finance. And therefore, they've got a very high propensity to pay us because they want to make sure that they continue to receive the service currently and into the future. And therefore, over our 20-year track record, we've had minimal losses in terms of all the business that we've written. And over that period, we've lent many hundreds of millions of pounds, which we've safely collected back and which we have given the benefit to our investors and to all of our other stakeholders, including our employees, including our funding partners. And we believe that we've been quite unique in being able to protect our stakeholders, all of whether they're consumers, whether they're our employees, whether they're our funders, whether they're our investors, because what we do is inherently a very safe form of business. Just in terms of the highlights of what we're doing currently, we have at any one time a lending book of over £30 million, and our business has been resilient. I talked about the global financial crisis earlier. We traded through the global financial crisis in 2008 to 2010 without any loss of service to all of our existing customers. So everyone who relied on us for liquidity, who relied on us for funding, we continued to service those customers as we'd always done prior to the global financial crisis. Again, roll on to the awful crisis that we're in at the moment, the COVID-19 crisis. Again, we have continued to provide service to all of the customers who needed finance to finance their essential goods and services. We've continued that service without any interruption during the whole of the COVID-19 period. And as we come out of lockdown, we have great confidence that we'll continue to provide that service and that liquidity to our customers. Our core business of insurance premium finance, by its nature, is robust and continues to grow. And we have also recently had some exciting initiatives in the business where we've signed up new and large trading partners. The most recent of those is Toyota. Toyota Financial Services, which is part of the Toyota Car Group, has been a party that we've recently entered into a partnership agreement with. Our other core markets, such as site fee lending, again, were dramatically impacted by COVID-19 in that people weren't able to go to parks when they wanted to go to parks. We still provided them with the liquidity that they needed to make sure that their site fees were being paid, and we provided that service throughout the COVID-19 crisis. We've also recently, as a result of...
You were just touching
Sorry,
on that. So if you just start from we also recently.
Yeah. We also very recently, on the back of our support of customers for their site fees for park occupation, we also recently launched a product which enables customers to finance their actual static caravan homes through our company as well. And so we're very excited about that product. We believe that it very much dovetails with our existing philosophy of doing safe lending to people who have a requirement for funding for something which is essential to them. In terms of our underwriting, I've talked about how our underwriting is very safe and prudent, which has culminated in very low losses in our business throughout our 20 years of operation. We've supplemented that recently by creating an open banking platform which enables us to underwrite customers who consent to that underwriting by looking at their bank statements. It's an exciting development in our business, and it gives us more insight into customers, and it also gives us more insight into their credit and their affordability of the product and the finance that they're taking. It will also enable us to lend in markets where we historically haven't lent, because we haven't had the underwriting expertise historically in those markets. But with open banking, we'll be able to underwrite effectively in many other types of markets that have been less open to us historically. We also believe that the insurance premium finance market holds a great number of opportunities for us going forward. We've been lending in that market for over 20 years. We are a well-established and respected brand in that market, but we are a small player because the market is dominated by two particularly large companies at the moment. There are new regulations coming in which will mean the duopoly that currently operates in the market will need to be changed, and that gives us great hope for materially increasing our lending in the insurance premium finance market into the future. So we believe that backed off our 20-year track record of lending safely, we will continue to lend in our core markets, but there are a great number of opportunities for our business in the future due to our robust platform and our solid underwriting criteria, and now also our ability to use open banking to further underwrite and ensure that we're doing good quality business into the future. Building on our 20-year track record, we believe we have a very exciting business plan for the future. And I will walk you through the key elements of that business plan. Our first and priority market is the insurance premium finance market, where we've operated for over 20 years. That market is worth over £10 billion in financing per year, and therefore represents a great opportunity for growth for us in the future. We're widely recognised as the third brand in the market. The two largest players in the market write many billions of pounds worth of lending insurance premium finance business every year, and dominate the market. But even in that time, we've always operated as the third brand. We've always operated as an alternative to the large players, because what we've been able to offer is unique service and unique products, which the two larger players don't have. So we're excited about the opportunity of continuing to grow into that market. And we believe that regulatory changes that are going to be implemented into the market at the end of May 2020, so very shortly, will open up the playing field for the market and ensure that there are more opportunities for smaller players in the market like ourselves to expand and increase their market share. So we're very excited about the opportunities in the insurance premium finance market. We will continue to look after our accountancy clients. We have worked with those clients for a number of years. We have over 400 contractual relationships with accountancy firms. We lend to thousands of consumers and businesses for their accountancy fees. So we'll continue to look after that market. There are over 5,000 accountancy firms in the UK, and we continue to look for new clients all the time to provide our service to. We'll also grow our site fee financing book, our static caravan book. We only started in that market last year. We've already signed up some of the largest park operators in the UK. So again, we see that significant growth opportunity for us in that market over the coming years. You may not know, but there are over 2,500 static caravan parks in the UK. So as I stated, we have contractual relationships with over 10 of those. So there's a large market for us to grow into the future. We believe that that site fee market itself is probably worth over £300 million per year. Currently, we're lending around £10 million per year into that market. On the back of the site fee financing market, and because of the great growth of staycations, of holidays in the UK, we will continue to grow our static caravan book. It's a product that we've just created. We've already written business to fund people to help them buy their static caravans. We believe it's a very safe market for us to be lending into, and in total we believe that that market is worth many billions of pounds per year, and we can quite simply grow our business in that market by servicing our existing clients and obtaining new clients over the course of our business plan. School fee funding is also an exciting area for us. There is currently only one dedicated provider of school fee funding in the UK. We will be the number 2 provider in the UK. There are over 2,500 independent schools in the UK as of today's date, and the fees that are paid to those schools amount to many billions of pounds a year. So again, it's an exciting market. We can provide an innovative product to help parents spread the cost of their school fees. So again, we're very excited by the prospects in that market over the course of our business plan. We also service leisure fees like golf club fees. We have over 100 golf clubs that we service as at today's date, enabling their clients to spread the cost of their golf club fees over a 12-month period. And again, we continue to grow that book, and we continue to believe that there's a large opportunity for us in that funding market. What I hope is relayed to you is that we've got a very stable lending platform. We've been lending for over 20 years. We've been lending prudently. We've never let anyone down in respect of our stakeholders, whether that's our employees, whether that's our funding partners, whether that's our investors. And we believe that our platform gives us a great springboard to launch into new markets in the future as well. That coupled with our open banking platform, which enables us to do real-time underwriting of a borrower by looking at the last 12 months bank statements or his or her 12-month bank statements, enabled us to get a unique picture into the affordability of each of our finance products for that customer. And again, we will only lend to individuals or businesses that satisfy us that they are able to afford the obligations. And that's built on our 20 years of lending, where we've always lent responsibly. We've always lent in the best interests of the customer. We've always ensured that we've done everything that we can to make sure that our lending will be paid back. It's part of our DNA, it's part of our culture, and it's something that we will continue to do going forward in our business. We listed our business in 2015 on the AIM section of the London Stock Exchange, which was a very great and proud moment for our business. And from that year on year, we've grown our business. The only reservation or the only stop we've had on that year-on-year growth is last year due to COVID-19. And even through COVID-19, we traded very well. There was less of a demand for some of our lending, but we still are very profitable, and we still didn't lose any of our client relationships. We retained all of our staff. We continued to service all of our customers. So apart from a small and slight drop in the demand for our product, we continued through as well as anyone possibly could have during the COVID-19 crisis. As we come out of the COVID-19 lockdown, we're very excited about the growth for our business. But it's demonstrated again to us, as did the global financial crisis of 2008, 2009, that in a tough market, we've got a tough business. In a tough market, we are resilient. We don't let people down. We continue to provide funding. And that makes us a very, very stable platform for very good and buoyant markets. And we do believe that over the next few years, UK PLC will rebound strongly, and we will take the benefit of that. Coupled with our new technology through open banking, we believe that we'll get even stronger at underwriting our customers, even stronger at making sure that we're lending to people who are able to pay us back, which is a core tenet of our business. We will only lend into markets, into consumers, into businesses where we are highly confident that we will get the money back. And that's why we've been around for 20 years. And that's one thing that we believe is critical to any finance business. It's obviously the most fundamental thing. It's very easy to lend money. The hardest thing is making sure that you get it back. And that's what we practice, and that's what we've practiced over the last 20 years. In terms of our financials, as I've said, since flotation in 2015, year on year, our business increased. Year on year, our lending increased until the COVID-19 lockdown. But even during COVID-19 lockdown, we are still profitable. We still paid all of our stakeholders, whether they're employees, whether they're our liquidity and funding partners, and whether there are investors who throughout COVID-19 have been paid their regular dividend on a regular basis. So we believe, again, that we haven't and continue to look after all of our stakeholders in our business. In terms of the future, I've mentioned to you our core markets and the core parts of our business plan. We're intending to conservatively increase our lending in the insurance market, in the professional fee funding market, in the site fee market and the static caravan market. And we'll continue to opportunistically look at other markets where we can safely lend with a very high degree of confidence that we'll get the money back. So just to summarise, our core markets, insurance premium finance, where we lend to customers, whether they're consumers or businesses who are buying an insurance policy. We have over 100 insurance brokers whose customers we service. We currently have 35,000 individual credit agreements to those consumers and to those businesses. And it's a very large market. As stated, we believe that there's 10 billion financing opportunity in that market. Most of it is taken up by two large players whose grip hold or whose stranglehold on the market we continually try and break into. But it only takes a mild bit of increase in our lending to materially increase the profits of our business. We've talked about the professional fee market, the accountancy fee market, where we lend to the clients of accountancy firms, whether they're individuals or whether they're businesses. We have over 400 contractual relationships with accountancy firms. We have over 2,000 agreements with the customers of accountants. And again, it's a very safe and robust form of of lending. Our other core market currently is the site fee finance market, where we help customers spread the cost of their static caravan fees. We have contractual relationships with some of the largest park operators in the UK, which we're very excited about. And we'll continue to grow into that market and offer adjacent products. Historically, we've financed the site fees. We are now financing the static caravans as well. And again, we believe it's a very large market for us to grow into, and we can still continue to do our prudent and conservative lending in that market. We've had the benefit of great support from our stakeholders over our 20-year history. Our key stakeholders, our employees, many of our employees have been with us for over 10, 15 years, and they're very loyal to our business. And obviously, they are the key to ensuring that we lend safely and that we provide excellent service to our customers. We've also had the benefit of support from a number of banks during our 20-year history. Barclays has led that support with a facility. We currently now also have National Westminster Bank providing us with bank facilities, and we also have bank facilities from Toyota Financial Services. So we're very well supported. Because we are a very safe business, we're very well supported by third parties who provide us with debt and liquidity. We're very well supported by our institutional shareholders. We're listed on AIM, and they continue to support our business. Many of those shareholders have been with us since we listed, and each year they've been paid dividends exactly as we promised them when we first listed in the market. So we've honoured our obligations to make sure that all of our stakeholders are looked after through our business, and that's really because we've always lent prudently. We've never lent irresponsibly, we've always lent carefully, and we've always lent on the basis of getting that money back so that we can look after all of the stakeholders in our business. So we'll continue to focus on growing our business, and our sales team is very focused on contact with introducers, whether they're insurance brokers, whether they're accountancy firms, whether they're golf clubs, whether they're park operators. And that continues. We've got a dedicated field-based sales team that's in continual contact. We market through email, through the internet, through letters, through brochures, through phone calls. We're continually refreshing our prospect list, and we're continually marketing that prospect list. We'll continue to target very large insurance brokers. Some insurance brokers in the UK are extremely large. For example, Direct Line is an insurance broker. So you can see that there are large insurance brokers that do many hundreds of millions, if not billions of pounds worth of business that we can continue to market to offer our finance product to. And we'll continue to diversify the focus of our business. We like insurance premium finance, and we'll continue to service that market, but we'll continue to seek out and explore new markets where we can lend prudently and where we can use the benefit of our many years of underwriting expertise, and now also enhanced by our open banking platform, which enables us to underwrite a borrower through looking at his or hers last 12 months of bank statements. So we also are very well supported by our banks. As I've stated, we have Barclays, we have National Westminster, we have funding from Toyota Financial Services, so we're very well supported by people who want to fund our business, and we'll continue to make sure that those partners are serviced and looked after. What this will result in over time is we'll continue to grow our platform. We're coming out of COVID-19, so we're very excited about the opportunities of growing our platform in the future. We'll continue to use our robust underwriting and our careful underwriting to ensure that when we lend, we'll get the money back. And we'll continue to look after our staff and our people, because they are the core of our business. And we'll always be opportunistic. We believe that there's a multi-trillion-pound lending market that we can lend into. We only want to do lending in certain sectors of that market, but the opportunity for a platform such as ours, with a 20-year track record, with dedicated IT, with dedicated staff who've been doing this for a long time, gives us great opportunities to continue growing our business in the future, and it's a very exciting time for us. Thank you very much.